I'm 680 News senior business editor Mike Epple. In a week that has seen just tremendous volatility on the financial markets globally over the first three trading days, today was an okay session for stocks with some positive signals on U.S. China trade, among other things. It gave a lift to the markets early, and plus some inflation data out of the United States, which came in line with forecast and keeps the U.S. Federal Reserve Central Bank on a path to raise interest rates, but nothing to the extreme. The talk early in the day was, again, regarding U.S. China trade relations following an interview that U.S. President Donald Trump gave to Reuters, talking about the possibility that he could intervene directly in the case regarding the chief financial officer of Huawei if he sees that as an opportunity to get a better trade deal with China. You add to the mix, well, just some signals out of China itself that they might be backing away from a made-in-China policy that was put in by the government a couple of years back, and that also could thaw trade relations. Meantime, the fallout from the Marriott Starwood data breach affecting more than 500 million customers worldwide could point back to the Chinese government. The New York Times reported today that it appears that data breach was led by a state-controlled cyber intelligence firm in China, despite the denials of the Chinese government itself. But the target may not have necessarily been just customer data of Starwood hotels dating back to 2014, rather U.S. government officials, maybe 2 million names compromised. The Trump administration has talked about this as another bargaining issue with China. In Canada specifically, though, as many as 3 class action lawsuits have now been launched against Marriott by customers claiming that the company did not do enough to protect consumer information. Bit of a blow to Bombardier today, as Via Rail announced that its newest trains will not come from the domestic supplier Bombardier, rather Siemens of Germany. Trains being built actually in California and then to the Canadian market. It's a $1 billion contract. The federal government had been lobbied by the Quebec government to get the work to Bombardier specifically, but the Fed said they didn't want to intervene just based on free trade principles. Now, meantime, Bombardier could be in line for another big rail order in New Jersey, as the New Jersey transit system is looking to upgrade its fleet of rail cars. Could be worth upwards of $3 billion. Price gap between Western Canadian oil and the U.S. benchmark has narrowed dramatically over the past several days. It's down to less than $12 U.S. Just a few weeks back, it was more than $50 per barrel, the price gap between the two. This follows the government in Alberta making some moves to curtail output, potentially at the start of the new year, and also this talk of getting more oil to the market by rail shipments going forward, which could alleviate some of the pipeline constraints. And shares of Canada Goose, a high flyer on Bay Street today, preceded by a 5-day drop for shares of Canada Goose, the luxury clothing brand, which saw its stock price today jump by about 6% after a 5-day 18% slide on worries that the brand was being targeted in China for a boycott. Again, all related to U.S. and China trade and the Huawei case in B.C. From the 680 newsroom, I'm Mike Epple for City News.